Hello everyone, and welcome to another video. So I just wanted to do this video update because I'm seeing something new, or I discovered something new um yesterday on VIX 25. So remember, initially I've been calling out a potential sell for VIX 25, and how that I was expecting, or I'm expecting a sell all the way to the downside. But upon seeing something new yesterday, this may not happen, or is most likely not going to happen. And I'll be sharing the reason in a few minutes. So, remember how initially the first video I made, I was using the trade platform or the website for analysis. That's charts.deriv.com, and over there I analyzed on the daily time frame, which was the highest time frame at the time. But you know, sometimes depending on the time frame that you are analyzing on, um, you are influenced by what you see. So your reasons for choosing a buy or a sell is based on the structure that that time frame is giving you. That's why oftentimes it is advisable for you to always analyze from a higher time frame perspective. Well, the daily time frame is a higher time frame. It's a very high time frame. So ideally it should be good enough. But upon using the MT5, okay, with the MT5 option you can get access to much higher time frames like the weekly and then the monthly, and that just changes the dynamics. So I just happened to look at this asset again the um on the weekly time frame and on the monthly as well, and I'll be showing it to you in a few minutes. And I realized that even though price is in a resistance zone on the daily time frame, okay, on the weekly, that zone is bullish, and I'm going to show you right now. So if you can see my screen now, this is currently the daily time frame, and basically the two red lines you see is the region of the inducements that I'm expecting to happen, the inducement I drew previously. So I'm expecting that price is going to come all the way to um price is going to come all the way to this line. Yeah, to um yeah, just to this line. Okay, that was what I was previously anticipating for, and it would still get there, but I have reasons to believe that it might even push upwards, because in the when you look at the chart on the weekly time frame, you'll see that that zone, which is an inducement currently on the daily time frame, once upon a time used to be a support, or is a support on the weekly time frame. So when you have such conflicting um, biases, what do? You always take that of the higher time frame, okay? Because the higher time frame is always stronger than any other time frame. So eventually, this market is going to correct itself to be bullish. The sells may still happen, but most likely wouldn't happen. Yes, so for this trade now, or for this asset now that I've been monitoring, I want to hold on to what the market will do, and then I react. So that's one attribute you have to have as a trader. And even after you've analyzed, try and confirm from higher time frames whether um, your bias is right. Okay, and even with that being said, whether your bias is right or wrong. Okay, as a trader, what makes you profitable is not only your strategy. Okay, it's a combination of three things, and one of those things is your risk management. So in my tutorial courses, I always say that um you need to have an okay strategy. Any strategy that gives you 4 out of 10 win rate is okay, provided you are combining it with good risk management, because there are days that your strategy may fail you, and you are human, you are bound to make mistakes. But in the days where you make a mistake and your strategy fails you, your risk management is what will save you. Because based on risk management, you always want to be taking trades that will make you more than when you lose. So basically, that's what it's about. So even if you take a loss, okay, you're because you are applying good risk management, um you are most likely going to um end up being net positive. So it's not that a good trader is one who doesn't lose, but a good trader is one whose net wins against losses, he makes his profit or his PNL positive, or his net profit positive. So upon an accumulation of trades that you take, okay, when you combine your wins and losses, you should end up being net positive. That's what will make you profitable. And yeah, so let me just finish up with what I was talking about. So let's go to the weekly time frame. So now take note of this area that I've marked, where these two lines are, that I'm expecting price to come to that side before they sell. But I'm changing my bias, that is mostly going to be to go higher than that, okay? And I'll be explaining that in a few minutes. So let's go to the weekly time frame. And yeah, let's go to the weekly time frame. So this is the weekly time frame. Now, when you look at the weekly time frame, you can see where we are at the market now, okay? Where I've put the arrow. So let me just zoom in so that it becomes okay. It looks like this is too big, right? So this is where I marked, right? Now, if you remember what I said a few minutes back, I said that once upon a time, that's region for the range of the inducements that we are expecting on the daily time frame now used to be what, a support zone, okay? Or they happen to, if you look at it, let me just get the arrow back. So if you pay attention to this zone, okay, you can see that you can see that price broke structure to the upside, right? Price broke structure to the upside. And okay, this is even where how I want to even lay emphasis on that. Once upon a time, it used to be a buy zone or a support. So let me just get the arrow again. um so this is what I'm referring to, okay? You see that price came there, hit on it, and then created all this move to the upside, right? So that's your support zone right there. Now when we got here, okay, when we got to this side, ideally you would have expected that price would go up, right? But why didn't price go up, but rather broke through to the downside? This happened because of market structure. Now, um, market structure is what every good strategy in trading the markets is derived from when it comes to technical analysis. Okay, and what do I mean by by that. Basically, what that means is that no matter the strategy you trade, okay, if it is going to make you profitable or if it's going to make you win on a trade, at that point in time that you apply that strategy, it was obeying the normal principles of market structure or the basic principles of market structure. So over here, you see that it was a support, right? And it pushed price to the upside. Then it came to this side and then it failed to give a strong buy. Even though if you zoom in, you see that there was a little buy. You will see that there was a little buy, but it was not strong because in that in that time frame or at that point in time, the trend was bearish and not bullish. So if you look at this one, let me just use a trend line. Okay, so let me just put it here. So if you look at this, you can see that price was going down all the way to the downside, right? Price was going all the way to the downside. So you realize that when you go to this zone, even though there was a little buy, it wasn't as strong as it should be. Why? Because the trend in that time is bearish. So you do yourself a lot of good or a lot of you do yourself a good favor by taking a sell than a buy, right? So that's how market structure influences everything. So based on that, okay, based on that, I think price might go up before eventually it comes down. From the daily time frame perspective, you are seeing it looks much of a sell because you are in a sell region and all of that. But if you look at this structure from the weekly time frame, the VIX 25 is still bearish too, but it just happens to be currently in sort of a buy zone. Okay, so um price would come up a bit. I'm expecting price to come up a bit. So looking at this new level, uh, let me just look at this new area. That's if price comes there again, we can look for a sell, some small sales, but eventually, when you pay attention from here all the way down, coming back up, down, you can see that this rise from the bottom here all the way to the top here can be sort of considered as an inducement, but it might go much higher if you are looking towards this area, then eventually react off something over here and then sell off a bit or sell off again. But for now, price can go much higher than currently where it is now. So maybe if the sell happens on the daily time frame, it's not going to be much, or I won't be surprised if it doesn't sell much. Exactly. So for this pair right now, I just want to observe it and see what it does in the future days. And then if I want to trade it, I might trade it. But whilst you wait for that, you can look at other pairs. Yeah. So that's why it's good not to be so fixed, or you should be dynamic. You should be able to um know when to pull your trigger and when to sit down and look again. Yeah. And once again, that's the importance of doing your analysis from a higher time frame. So even though the sell on the daily time frame is not totally invalidated, okay, basically I'm just saying that you have to exercise caution based on what the weekly time frame is given. Because on the weekly, even on the weekly time frame, price is bearish overall, or price has been bearish for the longest period. It just happens to be at that point in time sort of a slightly bullish zone, so price might go up a bit. That's all I'm saying that the chances that price might go up is a bit more increased. Okay, because previously I didn't have I hadn't looked at the weekly time frame perspective or the weekly time frame narrative of what price was um doing. But upon seeing that yeah, that's most likely going to happen. So in future, don't be surprised price goes up. The sell on the daily time frame might still happen, but might not be that much. So you want to trade with caution. So eventually price would come up to this side, but when it gets here, you expect some sales a bit to happen, and then liquidity will be taken. Then you go all the way up further, so you get to somewhere here. Then it will react off again, like that in that order. So as a trader, you just have to react to what price does. You don't act, you react. Yeah. So basically, that's what I wanted to share. If you're interested in learning more, yeah, you can message me and I'll add you to my mentorship program at a cost. So thank you very much, and until another time, bye bye.